Good morning, everybody. It's Wednesday, July 31st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down a penny and a quarter at 403 3/4. November soybeans were up 4.5 at 1025 3/4, and December Chicago wheat was down a half at 548.5. This morning, the USDA announced an export sales announcement of 104,572 corn to unknown destinations for 24. Good morning, guys. We were talking here just a little bit before the show. Overnight markets took out that 403 level in December corn, so it'll be interesting to see how we react here today. Dustin, maybe a few thoughts to kick us off this morning, and then we'll throw it around the room.
Thanks, Dan. So we had, new lows breached overnight here for corn, piece corn, just like beans have been trading new lows for the move. So there's that, all psychological $4 level that's within range here. So we'll have to see how the market reacts if that is tested, if there's any stops down there. Weather still looks to be conducive right now. It's just about finding fair value and fair price on where the crop ends up. There have been lots of times before where things look really good going into August, and then you get the final yield and it's different than what you expect. So, above trend line is probably where I think many people are trading right now. So how much of that's discounted into the price? The reluctance to sell has been very high. So maybe not all of it's discounted into the price. When we actually get to that, record harvest, how much of it comes right to market and gets dumped onto the front end of the market? I think that might be a big thing for spreads. And flat price, if we are at a 184, 185 yield. I think still playing to where we sit as individuals is important. What kind of floor do you have through all the products you have? What do you have over on the bean side of things too? All of that makes a difference. For me to get a strong opinion that markets need to go one direction or another right now is kind of hard, just because there's been so many bearish things thrown at the market and the price has fallen so much. So how much is discounted in is the question.
Yeah, Ben, what's on your mind this morning?
Yeah, I agree with everything that Dustin says. I just look at the price action over the last week. We did make a new low by a quarter tick this morning in corn. Beans took out their lows from the previous week. I think it starts giving you context for how difficult it's going to be to rally these markets. There's always an unforeseen. We were laughing, joking ahead of coming on about what those unforeseens could be. And every day we get a little closer to harvest, that uncertainty fades away. So I don't know today what shakes manage money out of a really profitable position prior to heading into the end of September. And if we feel that yields are pretty good, we're going to lower crop insurance protection, kind of a natural catch in the markets per se. So I'm not super. Last week's price action, I think, was a gut punch. Now we do have the opportunity this morning to reject new lows in corn. Maybe we can do that. I definitely think it's on an individual basis, and I think it's really important on how you construct, any sort of hedges that you're looking at. So it's not a fun market. It's not a great time, and we probably have a pretty large crop outside of some really poor or catastrophic event coming in the next 6 weeks.
Yeah, Dustin, we're going to get FOMC data out here later, early this afternoon. They're looking for some guidance on a potential September cut. So there's more exciting stuff really happening in the outside markets. And it's just, what's your thoughts in terms of some of that spilling over into our markets?
Well, I think it's really about the impact of the currency. We've been continuing to hit record, outside market stock valuations, and that hasn't been supportive at all for grains and commodities. And I think they're so obviously there's such a difference between those two sectors that we can't always correlate. We were commenting here recently about full carry. The last time that I remember full 12-month full carry was during the 2008 financial crisis. So like there obviously is an impact on perceived demand when the broader economy is affected negatively. I just don't know about positively. It's just still going to come back down to our supply demand fundamentals. The Bank of Japan raised interest rates here, so that's their currency has been falling to 1980s type low levels against the U.S. dollar. Japan's one of the largest buyers of U.S. corn, so a weak Japanese currency now strengthening might change some things there. Brazilian interest rates still 11% benchmark, and their currency has just been completely falling apart. That hurts us because that's our primary competitor for both beans and corn for exports. So as our prices have been falling, in a lot of cases, theirs have been stable or even higher in some cases through this year, just because their currency's been so weak. The Brazilian real is the worst performing major currency against the US dollar for the first half of the year. So when you start seeing, potential for US rate cuts, it's still about whether or not, even though that's kind of a loosening monetary policy that might be negative the dollar versus the real, there's still larger problems happening in emerging markets, and the U.S. is still seen as the best house on a bad block. So I don't know if I have a real strong opinion, unless they completely surprise us about how aggressive the first cut is. Maybe it's more than a quarter. In September. So we'll have to look at that guidance, because the economic data definitely supports a cut, and most people project, almost nearly 100% chance of a cut in September right now.
Right. Any other thoughts or comments here this morning, guys, on the grain side? We're pretty good. Okay. Rylan, a couple thoughts here on livestock before we come into the open this morning.
Yeah, livestock was pretty two-sided yesterday. Kind of a narrow range. There hasn't been any momentum here in cash yet, so waiting for that to develop. So just seems like the big drop that we saw, there really hasn't been any teeth to it just yet. We'll see though. Slaughter's been pretty much right in line with last week, so it just kind of feels like we're looking at maybe a steady cash market. I think that's kind of the expectation that's going in. It just, you still got the discount on the board here, but we got option expiration on Friday in the live cattle, and then first notice day on that following Monday. So most of the longs are going to be focusing on just moving forward, those that want to avoid delivery, and I doubt there's going to be any deliveries, especially with the discount on the board. So that just being said, still waiting for more information there. Beef prices were down slightly. Choice beef was at $314.48 yesterday afternoon. That was down 33. So it just feels like we're just waiting for something, maybe even in both places here. Hog market was kind of weaker, inside trade, got a narrow range. Carcass was down to 105.60. It was down $1.18, and weights this morning came in at 282.7. It was down 0.9 from the previous week, and we're still well above a year ago levels, 276.8. So overall, it just seems like we're a little bit more current. This recent rally here just seems like we got a little bit of near-term demand. We got a little bit of currentness in terms of the weights. So overall, it seems like there could be a little bit more optimism to see, but could also be short-term just because of seasonal demand and such. So I think we're just kind of watching. Everybody's eyes are on cash right now. We're just waiting for some better news or anything more interesting to trade right now. Right now, it's just pretty quiet.
Very good. Appreciate the update. With that, we'll wrap here this morning. If you love the War Room as much as we do, give us a like or subscribe. Doesn't cost you anything to do so. It'll keep you up to date on every thing that AgYield is putting out in terms of premium content. So go ahead, give us a like and subscribe. We certainly appreciate everybody that tunes in on a daily basis there. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Thanks for the thoughts and comments here this morning, guys. Good conversation, and hope everybody has a great day. We look forward to talking to you tomorrow.